Hi, this is Coach Daniel from FX Insights, and welcome back to another segment of news trading. So for today, we do have some high-impact news. It will come out at around 8:30 p.m. PH time. So we have four at the same time. So we have core CPI, CPI month-on-month, CPI year-on-year, and also unemployment claims. So let's dive in and let's see how the market reacted based on what actually came out in terms of like the previous and the actual. All right, so let's look at the charts.
We're going to be looking at the news for the CPI for today, Thursday, July 11. So as you can see right about here, so we have four high impact news. So core CPI, CPI month on month, CPI year on year, and then we have unemployment claims. Let's dive in. Core CPI, so this is the change in price of goods and services purchased by consumers excluding food and energy. CPI includes the food and energy, and of course this is on the year on year. So yeah, this is consumer prices that account for a majority of overall inflation. So inflation is an important aspect to look at for currency valuation because of rising prices, which leads central banks to raise interest rates out of respect for the inflation. All right, so let's look at the results here. So we could predict how it could potentially move. So we have core CPI. So this is the past data, so we can check it out how the market reacted. Okay, so we're looking at the USD JPY on the M30. Okay, so we could also compare. Okay, so this is USD core CPI. So the last one was, let's hear, June 12. So if we look back to June 12, so let's look at USD JPY June 12. So that should be somewhere around here. There we go. So this is the time, which is this is 15:30 on the broker's time. So as you can see, it dipped from this point up to this point, at least for the first 30 minutes. That is 1,053 points. So that's 105 pips. Right, and it kept going further until it reached this bottom right here before it reversed back. Okay, so that is at least for the June 12. So the previous is 0.3, and then it actually went down to 0.2. So that tells us that a decrease in the actual from the previous, right? So a decrease in the actual is pushing the USD to go down, right? So let's look at this further. And there's also for May 15. So May 15 is right here. So this is how the market initially reacted. So right on this red bar. So open there, roughly reached the 30 pips. So still the actual was lower than the previous. So that tells us again a decrease is bearish for the USD. It actually reached up to 92 pips going down before it reversed a little bit. And then it continued downwards here, at least for May 15. So April 10, let's look at April 10 right about here. So this is April 10, this one right here. So this green bar, so this is the initial reaction, at least for the April 10's core CPI. So at least for the core CPI on April 10, the forecast was to go down, but it actually retained it at 0.4. So it's the same as the previous. So that tells us that at least same results on the CPI will push the USD to go up. So at least for this one, the first 30-minute bar is 71 pips. It actually went further upwards to about 144 pips. So still, so increase or at least retaining the previous will be bullish for the USD. So continuing on, March 12. So March 12 is right here. So this big green candle right here, there was actually an indecision here. So opened when the news came out, there was indecision. So I think at least for March 12, the forecast was to decrease. A lot of the traders must be placing sell trades at least before the data came out. So that was might be the case why there is a dip right here, but the actual is actually retaining it at 0.4 as well. So there was a reverse, roughly around 110 pips, at least for the first 30-minute bar. So it's still supporting our initial reaction that an increase or at least retaining the previous result will be bullish for the USD. Lastly, here for Feb 13 right here again. So this big green bar is the Feb 13. So this one, the previous is 0.3, and then the forecast was actually to retain it, and it eventually made a bigger, greater than the forecast. So that jumped the price right here. So from this point it really jumped on the first 30 minutes to about 117 points. So still, it is supporting our, at least in the initial reaction based on the actual. So if we look at the others, because there is multiple news for today, we have core CPI, month on month and year on year, and we also have unemployment claims. So looking at this, they do roughly have the same reactions, right? So the difference here is the CPI year on year. It was actually this one right here, Feb 13. It didn't have the same reaction as we thought, but CPI month on month and core CPI did agree on which direction they want to go, except for the year on year. Lastly, here is another one, unemployment claims. So looking at this on the chart, let's check it out. So I'm just going to close this for now so we could see it side by side. There we go. Okay, so we're gonna look at the unemployment claims. So unemployment claims is the number of individuals who filed for unemployment insurance for the first time during the past week. So usually an increase from the previous would be bearish for the USD, and a decrease in actual would be bullish for the USD. Of course, it's not always on the same date, at least for the CPI, but for today we do have unemployment claims at the same time we have CPI as well. So yeah, so looking at this, just to prove the point here, we have one back in July 11. So this is roughly, let's see, roughly around here. So this is July, at least for July 11, this is the forecast. So the forecast is to go lower. So that might be bullish for the USD. That is the forecast. Looking at the past data for unemployment claims, this is, let's see, nope, not that one, July 3. So there we go. So this is July 3. So yeah, we have these red, big red bars roughly around here. So the initial reaction did actually go down by around 8 pips, and it did still go down further up to this point right here, which is 110 initial reaction. So at least for the previous data is 234 and the actual is 238. So that is an increase in the actual, which should be bearish for the USD. June 27, checking out June 27, yeah, it's somewhere around here, right across here. Okay, so this was the initial reaction right about here. It did go down by around 17 pips. So this is June 27. Yeah, so June 27 went down by 18 pips. Let's see. So the actual was a decrease, so that should be bullish for the USD. But looking at this, it's a small movement going down. It's like 18 pips, and then eventually it pushed the price to go up by around 100. So yeah, basing everything on that, if everything goes well in terms of the forecast, so right about here, the forecast for core CPI is to retain it. CPI month on month forecast is for it to increase. CPI year on year is to decrease. So there is a high chance that the USD would be bullish by 8:30 p.m. Philippine time. So of course, the forecast is not always correct. So I do advise just wait for the actual data to come out before you place your trade, or look for those reversal points. So that's pretty much it. Thank you very much for joining me on this new segment, and take note, be very careful when you're placing your trades. Yeah, thank you very much.